Hello everyone, Jordan here. Today, I would like to share with you a powerful formula that you can use to help you assess stocks. This is called the GEM formula, G-E-M. However, before I start, I would like you to ask yourself, what are your problems faced so far in your stock investing? Some of you might not have started yet, some of you may have 3 months, 1 year of experience, and some of you are very experienced investors with up to 10 years of investing experience. However, all of you will definitely have faced problems in investing and assessing stocks. For myself personally, one difficult thing to do is to assess the competitive advantage of a company, commonly known as the economic moat. It's very hard to assess and find out what a company's strength is and whether this strength can actually keep up competitors. This is even more difficult if the company or the stock is not in your circle of competence. In that case, it is very difficult and you have to keep reading up on the whole industry, reading up on the company's financials, its company's earnings call in order to even understand the company. So this is very difficult and is out of the reach of many an investor. Also, no matter how good you are, even people like Warren Buffett, they are subject to cognitive biases. What are cognitive biases? These biases can be all kinds of things, even maybe talking about confirmation bias, whereby as an investor, we only listen to the information that confirms what we want to believe. For example, if you want many people think that Facebook is a very good investment and they only look for the good news that tells the investor that Facebook is a good investment, and they ignore all the bad stuff. And lastly, the most important thing is that there is no time. Many of us are holding full-time jobs. We have no time to read through the annual report, read through all the financial statements, and go and do a research on the company. I believe many of you don't want to take investing as a full-time job. Many of you just want to earn your results and then move on and to do things that you actually want to do. So, what if we had a way to make fundamental analysis simpler for you? First, let me introduce 2 very famous gurus to you. 1, Warren Buffett, and 2, Joel Greenblatt. Both of them have plenty of years of experience as an investor, are well recognized by many people around the world, and are managing billions of dollars in assets. So let's see what these gurus can teach us. First, let me share with you a powerful quote by Warren Buffett. It is far better to buy a wonderful company at a fair price than a fair company at a wonderful price. So, how many of you agree with this statement? Personally, I believe that this statement is very powerful even though it looks very simple. It is like buying a pen to use. Would you rather buy 1 ballpoint pen for $1 with a very decent quality and does not break, compared to 100 lousy ballpoint pens at 1 cent each? You may be able to get more writing done with the 100 pens because you have so much more ink, but them breaking down, causing you all the frustration. I would rather definitely buy the quality product as long as it is for a fair price. And next, let me introduce Joel Greenblatt. He wrote this book, The Little Book That Still Beats the Market. What he did is putting the words mentioned by Warren Buffett in the previous slide into a very simple magic formula with 2 ratios. Okay? And this is what happened. Over 30 years, 1988 to 2009, the S&P 500 has gotten 9.55% returns per year. Pretty good, it's really pretty good to achieve such a result. And $10,000 in those 30 years became $74,000. However, for the magic formula, in the same 30 years, with 2 simple ratios, $10,000 grew to $1 million. so much difference, okay? And it's 23% year-on-year returns. No matter how good you are, if you imagine that there is a formula that you can just put money in following the same rules, and 1 million just comes to you in 30 years, just like this. Isn't it amazing? I bet many of you are very excited to find out what this formula is. So let's get into it. So following Warren Buffett's formula, wonderful company and fair price, let's do a split. 50% of the ratio goes to wonderful company, 50% goes to fair price. So an even split to make it very simple. Okay? And let's split the GEM. First, G, great returns. Great returns is represented by a formula called return on capital. So this comes from the book. Okay? Great returns is actually looking at assessing a company's efficiency at allocating the capital under its control to profitable investments. Sounds like a mouthful, doesn't it? However, it simply means that a company is using its cash, using its assets in its most efficient way to earn its returns. Okay, and in this case, we use something called the EBIT, earnings before interest and tax. Why do we use this instead of net income? Because interest and tax, they will distort the actual amount that is earned by the company. By using EBIT, we are able to find more detail about how companies earn their money and how companies earn their money through the operations instead of being affected by things like interest and taxes. Okay, so that is actually the numerator. But what's the denominator? It's something called net fixed assets plus working capital. What is net fixed assets? Simply, it means that the property, factories, and equipment that a company uses to generate money. For working capital, it is just current asset minus current liabilities. So it's just meaning that how much a company owes and how much a company has. Okay, and it does this comparison to find out what is the exact amount of capital that a company used to generate its investments. By now, I bet some of you are so confused, like taking so many notes, trying to understand. Don't worry, it is too complicated. Just remember, we are looking at ROC more than 30%. Okay, this ROC is a very famous formula ever since it was popularized by Joel Greenblatt. So there are many websites out there that provide this ROC without you having to calculate by yourself. Some of you will ask me also, why ROC over ROE? Okay, ROE is by far the most popular return ratio that is used by companies and analysts out there. However, being the most popular to calculate return to shareholders, companies will tend to manipulate their balance sheet, structure their financials just to get a higher ROE amount on their financial ratios. Okay, but ROC, return on capital, is much harder to manipulate. So that's why we want to look at ROC. Okay, now that we got great returns, let's skip first to M. Okay, M in the GEM formula means most value for money. So why do we go to most value for money? This is because it is the second ratio that is found in Joel Greenblatt's book. In this book, there is this formula called earnings yield, which is a very complex term used by finance professors, but it's pretty much a very simple formula. So earnings yield measure how undervalued a company is based on its earnings and company size. It is calculated as follows: EBIT, which was used earlier, over enterprise value. Again, some of you will be like, what is enterprise value? So let me share more. Enterprise value is the measure of the total value of the company. So instead of determining firm's value based on the market capitalization, it gives the aggregate value of the firm as an enterprise. So this EV is actually an improved version of market capitalization by factoring in the debt that the company has and the cash that the company has. Okay? Again, most of you are already like so confused. Enterprise value, EBIT, all these terms which I have not used before and have not been taught to me by any other people, any other courses that I've attended, any other books that I've read. However, you don't have to fast so much. You just need to remember EBIT over EV is more than 10%, also known as earnings yield. However, you just have to be careful when you go to other websites, as some of them calculate it the other way, which is EV over EBIT. So now we know what is G, which is great returns, and M, most value for money. Let's go on to the last part of the formula, which is E, excellent earnings quality. So excellence earning quality is something that we have added on top of Joel Greenblatt's formula, which actually only consists of G and M. This is because we believe it is always good to improve upon formulas that you learn. Okay? And the E excellence earning quality comes from this book, Millennium Money, written by Patrick O'Shaughnessy, who is the son of a very famous investor, James Shaughnessy, who wrote the classic book, What Works on Wall Street. Go check it out if you have a chance. It's a very good book. Okay, in this book, Millennium Money, it talks about how operating cash flow is the lifeblood of a business. Okay, companies can claim to earn a very high income, but they cannot manipulate the operating cash they receive. This is because this operating cash is actually recorded in the financial statements, and it actually measures the cash that comes into the company based on the operations of the company. Okay? By adding this earnings quality into our GEM formula, we can assess the sustainability of the company's earnings and how good the quality of the earnings and the income that companies claim to have. How do we measure earnings quality? It is by subtracting the net income from the operating cash flow, and again we need to adjust for the company size, so we divide by the market capitalization. Simply do the calculations, and if you get a positive result, this is good and this company is earning a lot of operating cash flow and it's very strong. So there we have it. Based on the formula 50% wonderful company and 50% fair price, we have come up with 3 good ratios that we can look at. G, great returns, where we look at the return on capital more than 30%. E, excellent earnings quality, where we look at a positive number. And finally, M, most value for money, where we look at the earnings yield or EBIT over EV more than 10%. Okay, so if a company is managed to achieve all 3 of these, it is a very strong reason to go into it and buy it, because the numbers prove itself. So earlier, we have been using the checklist method, which is identifying which stocks have all 3 of the GEM, and if they have GEM, we will buy it and hold the company for the long term. This method, the checklist method, is good to assess any stock that you want to look at. However, what if you wanted to compare every stock in the world? How will you do it? Instead of doing the checklist method, let me introduce you to a more powerful method that you can use. It's called the ranking method. How do you do the ranking method? Imagine you have 3 stocks, stock A, stock B, and stock C. So for the first ratio, G, great returns, we are looking at return on capital. We will find the ROC of all 3 stocks, A, B, C. If A is 20%, B is 10%, and C is 0%, we will rank them from the best to the worst, and we will repeat for E and M. Okay, so when we repeat for E and M, each stock will have a rank for each of the category, and what we do is to create a combined GEM rank. Okay, with a combined GEM rank, we will be able to buy stocks with as low a GEM rank as possible. These stocks will have the best balance of wonderful company and fair price. Again, some of you will ask me, this is a very big problem. I'm only one person. How do I get the data to compare all the stocks in the world? USA has 18,000 listed stocks, 18,000 plus listed stocks. In the NYSE and Nasdaq, which are 2 major exchanges in the US, they have 6,000 plus stocks alone. Hong Kong Stock Exchange has 2,000 plus listed stocks, and Singapore has about 700 listed stocks. This is so much data, and how can one person calculate the G and the E and the M for every company and compare all of it together? Isn't it crazy? This is where I would like to introduce to you our newly launched app, Legends of Investing. Be a legend today. With this app, you'll be able to use technology to automate your analysis and to make investing fun and social. Best of all, this app is free to use. Earlier, I've shared the GEM formula. This GEM formula, we will be crunching all the data and providing to you the analysis for each ratio. We also know that many of you are very scared of investing. The big media tends to make stock investing a very arcane art, something very scary. It is not. It is our goal to make investing as fun and as sociable for you, and that's why we have cute characters that you can choose right here. You can also search for the fundamentals for any stock in the US Nasdaq, NYSE Exchange, Hong Kong Exchange, and the Singapore Exchange. Okay? You'll be able to see up to 5 years of stock price chart, and you'll be able to see the fundamentals which we have calculated, which we have the ratio earlier. Okay, great returns, ROIC, all calculated for you. Excellent earnings quality, all shown to you. GEM rank, where we rank all the companies in that country. So for example, US has 6,000 stocks. We will rank all 6,000 stocks based on the GEM formula that we shared earlier. That is so powerful. You don't have to do any more manual calculation anymore. Say goodbye to getting formulas on getting data on financial websites, slowly doing calculation, using a calculator to find out what is the actual ratio. No more. Now the app will do everything for you and save plenty of your time. For those of you who want to look at TA instead, you can look at our TA indicators which we have put in the app. This is kindly borrowed from TradingView, whereby they look at 1 month, 1 day indicators based on the most famous indicators all done over the world. So simply click into the technical analysis indicator and you will find more information about each indicator. We also use an RSS feed to collate all the latest news from the famous financial websites like Seeking Alpha, Yahoo Finance, so you don't have to leave our app in order to find the latest news. We also mentioned making investing social. So how do we do that? We invite you to share your views in our app. We have a forum in our app for each stock ticker. So simply go into the stock ticker, create a topic, type in your comments, and you will immediately see it in your comments page here. Okay? Whenever someone comments, you will know it as well, and then you can join in the conversation and share your topics, share your ideas, share your comments, and together we will learn how to invest better as a community, and we will improve together. Finally, for those of you who want to save even more time and get the best stocks immediately, do take a look at our GEM Finder service found in your app at the bottom footer. Okay? While it is free for you to go into each and every one of our stocks to find out the GEM ratios and the GEM rank of a company, if you subscribe to this service, we will automatically sort the top stocks for you and give you the best stocks ranked by country and by market cap. So if you want to get the best investing ideas from us at the palm of your hand as quickly as possible, we have this service for you, the original price being $15.99 per month, and for a limited time only, our launch offer is $6.99 per month. Okay? If you sign up now, you will even get 14 days free to test out our service and to see whether it suits you. So I highly encourage you to go into GEM and try out our 14 days trial to see what stocks you can find, and I hope it will help you in your investing journey. For those of you who have not downloaded our app, sign up now on Android. You can get it on the Play Store, and if you are using iOS or website, you can click on this link below, or you can search bit.do/legendsofinvesting to access it on your iOS browser or on the website. I hope this session has benefited you a lot, and if you have any questions, feel free to contact me or my team. Until then, Happy investing.